Let's start right off with a check of the market from Jared Levy. He's the Chief Market Strategist at Peak American Financial. Jared, hard to believe this is the start of the fourth quarter. How did we get here?
I know. It was like New Year's Eve, and now we're back to Thanksgiving already. I don't even know what's happening. I'll tell you, I'm looking forward to the fourth quarter. I think we're going to learn a lot here about the future, about 2025. Obviously, this week, we've got the jobs number coming out Friday, which is obviously going to be another big reason the traders either bet for or against what could be a 50 basis point rate cut in November. A couple of things I'm watching. Thursday, obviously, ISM, PMI services, that releases out we're literally just teetering on expansion. I'm looking at that. I want to see factory orders. I want to see what's really going on in this economy. That's what I've been focused on. Headlines are great. I'm digging into the nitty gritty, trying to see, are we falling apart here? I've noticed cracks in the labor market. I think the Fed sees it too, and that's why they've been aggressive. I think 50 basis points again in November would be a little bit overkill. Do we need it? Yes. I'm worried, though, that then you start to stoke more of those fears, which concerns me. One last thing I want to mention, obviously, unless you've been sitting under a rock, you'll know that China has enacted like $114 billion stimulus package. They've announced it.
What's your trade of the day?
All right. So obviously with China, it's a huge catalyst. Now, do I think it's going to be successful long term? I actually do not. Obviously, this is they're calling it the bazooka of stimulus. Some economists are, and I do believe that it is pretty major when you sort of look at things in context, the largest since we've seen since the Great Recession. Now, how do I play it? Well, I think it is a great catalyst for the near term. I like EEM. It's an emerging markets ETF that is highly centered around China. China is not really an emerging market anymore. I mean, they are like the world's third largest economy or second largest economy now. So, it's a bet on China stimulus. It's a bet on the run in the markets. FXI is also a way you would play it. But, I think either way, you're okay. I will tell you this. If you're buying EM here, I would only look for about 5 to 10% upside and then take your money off the table. This could be buy the preemptive, sell the actual implementation of the stimulus. If you're trading FXI, which I also like, you can buy it here around 31. My target would be around 36. Again, either of these ETFs works because it will synthesize some of the movement that we're going to see likely in China, digital, large cap, tech and communications, and some finance where a lot of this stimulus is going to be pushing into. But again, use caution. It will be volatile. And I wouldn't hold these long-term because I'm not sure of the long-term ramifications of their actions.
Have a great trading day, Jared.
Thanks, Ange. Great to see you.
Go to businessfirstam.com for where to see our show on TV.